Excellent. Fresh data. XRP just touched 1.51 on April 17th. ETF inflows are 65 ball mailers in April, record pace. The Iran ceasefire expires April 22nd. Rakuten launched XRP for 44M users, and there's a critical 1.44 resistance level where 36.8 billion XRP, 60% of supply, has its cost basis. Let me write a completely new script on a topic we haven't covered. XRP just touched 151 for the first time since February, and then it got rejected again. Right at the same level, the same wall, the same price zone that has been blocking every rally in 2026. And the reason is a number that almost nobody is talking about. 36.8 billion XRP, 60% of the total circulating supply, all held at a cost basis of 144. That is millions of wallets that have been sitting underwater for months, waiting for their first chance to break even. And every time the price pushes toward that level, they sell into it. The rally stalls, the price drops back, and the cycle repeats. This is not manipulation. This is not dark pools. This is not whales suppressing the price. This is basic market mechanics. A massive wall of supply sitting at the break-even point for the majority of all XRP holders on Earth. And until that wall is absorbed, every rally dies at 144. Today I'm going to explain exactly what this wall is, why it exists, how it gets absorbed, what happens on the other side of it, and why the April 22nd Iran ceasefire expiration creates a 5-day window that determines whether the wall breaks this month or holds for the rest of the quarter. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop wall in the comments if you've noticed the 1x44 rejection pattern. Drop Y in the comments if you've been frustrated by the price stalling at that level without understanding the cause. Drop break it if you believe the current momentum is strong enough to push through, because the mechanics I'm about to explain change how you think about every rally attempt and every pullback from here. Welcome back. I am the calm analyst. Around here, we decode the mechanics that price charts can't show you. Today, we're dissecting the 144 cost basis wall, the 5-day window created by the Iran ceasefire expiration, the record ETF inflow pace that's attacking the wall from underneath, and the Rakuten catalyst that just added 44 million users to the XRP ecosystem. Let's get into it. Let me start with the wall, because until you understand why 144 matters, you can't understand any XRP price movement in 2026. Glassnode data shows that approximately 36.8 billion XRP, roughly 60% of the total circulating supply, is held at an average cost basis of 144. This is the single largest concentration of cost basis in XRP's entire distribution. What does that mean in practical terms? It means that when XRP traded above 144 in late 2025 and early 2026, billions of dollars worth of XRP was purchased at that level by millions of wallets. When the price crashed from 280 to below 130 through 6 consecutive months of decline, those holders went underwater. They've been sitting on losses for months, some for half a year. And human psychology is predictable under these conditions. When a holder has been underwater for months and the price finally returns to their entry point, the overwhelming impulse is to sell, to break even, to escape the pain of watching their investment decline without having to realize a loss. This creates a massive supply wall at 144. Every time the price approaches that level, millions of wallets start selling. Not because they think XRP is going to crash, because they've been waiting months to get their money back, and the relief of breaking even overwhelms the potential of holding for higher prices. On April 17th, XRP pushed to an intraday high of $151, the first time it touched 150 from below since February, and it closed at 147. By April 19th, it was back to 143. The wall absorbed the buying pressure and pushed the price back down. This pattern has repeated all year. Every rally that approaches 144 to 150 gets met with selling from the cost basis cluster, and the rally stalls. If that mechanic just explained why XRP keeps getting rejected at the same level, smash that like button. Because understanding the wall is the difference between frustration and patience. The wall is not evidence that the thesis is broken. It's evidence that the thesis hasn't been priced in yet, because the supply overhead is absorbing the demand before it can produce a breakout. Now let me explain how the wall gets absorbed, because this is the critical question, and the answer has a specific mechanism. There are only two ways a cost basis wall breaks. Either the selling exhausts itself, meaning enough of the 36.8 billion XRP at 144 has been sold that the remaining supply at that level is no longer sufficient to absorb buying pressure, or the buying pressure becomes large enough to overwhelm the selling in a single move, pushing through the wall so quickly that the sellers at 144 don't have time to react before the price is already at 160 or higher. The first method is gradual. It requires sustained buying pressure over weeks that slowly chips away at the wall. Each rally attempt absorbs some of the selling. The wall gets thinner, and eventually the remaining sellers at 144 are overwhelmed by the next push. The second method is explosive. It requires a catalyst large enough to produce buying volume that exceeds the selling capacity of the wall in a single session. Think ETF approval. Think Clarity Act passage. Think a major institutional announcement that shifts the market's probability estimate for XRP's future value so dramatically that the sellers at 1.44 become holders instead of sellers because the new information changes their calculus. Right now, both methods are in play simultaneously. The gradual absorption is happening through ETF inflows. April has already seen $65.89 million in net inflows to XRP ETFs. That is on track for the biggest monthly inflow of 2026. Since April 10th, XRP ETFs have recorded 6 consecutive days of inflows totaling $64.47 million. Bitwise and Franklin Templeton are leading the charge. Combined ETF AUM is approaching $1 billion with approximately 787 million XRP locked in custody. Every dollar of ETF inflow purchases real XRP through OTC market makers and locks it in institutional cold storage. That XRP does not return to market. It's absorbed, permanently removed from the tradable float. Each day of positive ETF inflow chips away at the wall from underneath, and the explosive catalyst is approaching. The Clarity Act markup is targeting late April. The Senate Banking Committee has 2 working weeks left. The stablecoin yield compromise is done. The SEC roundtable on April 16th addressed implementation details. If Tim Scott announces a markup date and the bill advances, the buying pressure that follows will not be gradual. It will be a probability-weighted repricing event that hits the wall with more force than the wall can absorb. Standard Chartered projects $4 to $8 billion in new ETF inflows post-Clarity Act. $4 billion in buying pressure, hitting a wall that $65 million per month has been slowly chipping away at does not produce a gradual push through 144. It produces a gap through it. The wall doesn't thin, it evaporates. Comment below. Do you think the wall breaks through gradual absorption or an explosive catalyst? Type gradual if you think the ETF inflows will slowly chip through it. Type catalyst if you think it takes the Clarity Act or a comparable event. Type both if you think the gradual absorption weakens the wall enough that a moderate catalyst can break it, because the mechanics produce different price trajectories depending on which method succeeds first. Now let me add the 5-day window, because there's a macro variable that most people aren't factoring into their analysis. The Iran ceasefire expires on April 22nd. That gives XRP approximately 5 trading days from now to attempt a sustained break above 144 before macro risk potentially returns. If the ceasefire holds or extends, the macro environment stays supportive. Bitcoin holds above $75,000, risk assets maintain their recovery, and the buying pressure attacking the wall continues uninterrupted. If the ceasefire expires without extension and the conflict escalates, oil prices could surge above 110 again. Bitcoin could sell off. The entire crypto market could face renewed pressure regardless of how strong the XRP-specific fundamentals are. XRP's 1.5 to 2.0x beta to Bitcoin means it would amplify any BTC sell-off. This creates a defined window. The next 5 days determine whether the wall breaks during supportive conditions or holds and faces potential macro headwinds that push the price back toward $1.30. The weekly RSI closed at 77 on April 17th, overbought territory. Support sits at $1.38 at the 50-day EMA, $1.30 at the historical floor, and $1.08 if ETF inflows reverse. The top 50 wallets control 40 to 45% of supply. The top 100 control 75 to 80%, including exchange custody and escrow. The 5-day window is not a guarantee of either outcome. It's a defined period where the probability of a breakout is highest because the macro conditions are temporarily supportive. After April 22nd, that support may or may not continue. And the community needs to understand that the catalyst timing matters as much as the catalyst itself. Subscribe right now, hit the bell, drop it in the comments, because the next 5 days are a defined window where the cost basis wall, the ETF inflows, the Clarity Act timeline, and the ceasefire expiration all converge. Every development gets covered in real time. Now let me talk about what happens on the other side of the wall, because this is what most people miss, and it's the most important part of the entire analysis. When 60% of circulating supply has its cost basis at 144 and the price pushes through that level with conviction, meaning a daily close above 150 with volume, the dynamic flips completely. Below 1.44, the cost basis cluster is supply. Sellers breaking even. Resistance. Above $1.50, the same cost basis cluster becomes support, because those same 36.8 billion XRP that we're selling at break even now represent holders who are in profit. And holders in profit behave differently than holders at break even. They don't sell immediately. They hold for more. They wait for higher prices. The urgency to exit disappears the moment they cross from loss to gain. This is why cost basis walls produce explosive moves when they break. The resistance doesn't just disappear, it inverts into support. The selling pressure that was blocking every rally transforms into holding pressure that supports the new price level. And the next resistance doesn't appear until a much higher price where a different, smaller cost basis cluster exists. Between 150 and 170, there is significantly less cost basis resistance. The XRP that was purchased in that range during the decline has already been sold during the 6 months of drawdown. The sellers already exited. The supply is thinner. This means that if XRP closes above $1.50 with conviction, the path to 1.70 has substantially less overhead supply than the path from 130 to 150. The move accelerates, not because of new buying, because the selling disappears. And at $1.70, the next significant demand zone from December 2025 becomes the target. Above that, $1.80. Then the 200-day moving average at 1.88, the key bull-bear line for the entire 2026 structure. A close above 1.88 flips the long-term trend from bearish to bullish for the first time all year. The cost basis wall at 144 is the gatekeeper. Everything on the other side of it is structurally easier to reach than everything on this side was to grind through. The first $0.15 of the breakout is the hardest. The next $0.30 is significantly easier. And the move from $1.70 to $1.88 is where the trend potentially changes for the rest of the year. Now let me connect the Rakuten catalyst, because this happened on April 15th and the market hasn't fully processed what it means. Rakuten Wallet launched XRP as both a listed asset and a payment method, reaching 44 million Rakuten Pay users across 5 million merchant locations in Japan. Users can buy XRP using Rakuten loyalty points, 3 trillion points worth $23 billion in circulation, and hold it within Rakuten Wallet. This is not a partnership announcement. This is live integration into one of Asia's largest consumer ecosystems. 44 million users who can now spend XRP at 5 million merchants. Convert loyalty points to XRP. Hold XRP in a regulated wallet. Use it for everyday commerce. Ripple called it one of the most significant milestones for XRP adoption, and the timing is not accidental. It launched on the same day XRP began its push toward $150. The Rakuten integration provides a narrative catalyst alongside the ETF inflows, giving the market two simultaneous reasons to buy into the wall rather than wait. Japan is XRP's most advanced institutional market. XRP is on the JVCA green list. 20 member exchanges support it. SBI Ripple Asia operates across 4 major payment corridors. Japan cut crypto taxes from 55% to 20%. And now the country's largest e-commerce and loyalty platform is embedding XRP into daily commerce for 44 million users. The Rakuten integration adds a new dimension to XRP's demand profile that didn't exist before. Not institutional, not speculative, consumer. 44 million potential daily users creating organic transaction demand on the XRP ledger. Each transaction burns XRP. Each conversion from loyalty points creates buying pressure, and the integration is permanent. Once embedded in Rakuten's ecosystem, it doesn't get removed. Let me bring this all together, because the picture right now is defined by one number, one window, and one question. The number, 144.4. The cost basis of 60% of all circulating XRP. The wall that has blocked every rally in 2026. The window, 5 days before the Iran ceasefire expires on April 22nd. The period of maximum macro support for a breakout attempt. The question, does the wall break now, or does it hold for another cycle? The forces attacking the wall are the strongest they've been all year. ETF inflows at record April pace, 65 million and accelerating. 6 consecutive days of positive inflows. Rakuten launching XRP payments for 44 million users. The Clarity Act markup targeting late April, the stablecoin compromise done, whale accumulation at 10-month highs, exchange reserves declining, Bitcoin holding above $75,000. The forces defending the wall are mechanical, 36.8 billion XRP at 1.44 cost basis, millions of holders who have been underwater for months and are selling at break-even, overbought RSI at 77, and the April 22nd ceasefire deadline introducing macro uncertainty. The outcome of this contest determines the trajectory of the next quarter. A clean break above $1.50 with a weekly close inverts the wall from resistance to support, opens a low resistance path to 1.70 and $1.88, and potentially flips the long-term trend bullish for the first time in 2026. A rejection below 1.44 with the ceasefire expiring sends the price back toward the 1.30 support where it waits for the next catalyst. Both outcomes are possible. The probabilities are not equal. The forces attacking the wall are structural: ETF inflows, institutional accumulation, consumer integration, legislative progress. The forces defending the wall are psychological: break-even selling from underwater holders. And psychological selling has a defined endpoint. Once the supply at 144 is absorbed, it doesn't regenerate. Structural demand is persistent. Psychological supply is finite. The wall breaks when the structural demand exceeds the psychological supply. The ETF data says that moment is approaching. The Clarity Act timeline says the explosive catalyst could arrive within weeks. And the 5-day window before April 22nd says the attempt happens now, under the best macro conditions available. Price is a distraction. Value is the reality. Structure is what matters. And the structural contest between $65 million in monthly ETF inflows attacking a 144 cost basis wall while the Clarity Act approaches and 44 million Rakuten users come online is the most important price mechanic in XRP's 2026 story. Everything we've built, the infrastructure, the regulation, the institutional positioning, converges on this wall. And what happens at 1.44 determines when the market finally begins to reflect what the infrastructure has been saying all along. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. Comment, calm analyst, below. Tell me, does the wall break this week? Drop your honest call. Because the mechanics are clear, the window is defined, and the forces are in contest right now. This is the moment where understanding the structure gives you the edge over everyone watching the chart without knowing what they're looking at. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational. And as we always do, we don't wait for the future, we plan for it. Peace.